Welcome to The Explainer. So today, we're going to chart a course through the pretty complex waters of U.S. taxes and insurance. This is specifically for you if you're a European business looking to make your mark. And this isn't just about, ticking boxes for compliance. It's about building a really solid foundation for success. Good old Ben Franklin was definitely onto something, wasn't he? And look, while taxes are a certainty everywhere, navigating the system in the United States, well, that presents a totally unique set of challenges and, frankly, opportunities that can genuinely make or break your company's entry into the market. So here's the crucial point. The companies that really succeed tackle these topics head-on, right from the very beginning. They're not "we'll get to that later" kinds of things. And getting it right all starts with understanding one fundamental difference from how things are probably done back home in Europe.
Okay, let's dive into this first major adjustment you're going to need to make when you bring your business across the pond. It's a structural difference, and honestly, it trips up a lot of people.
This right here highlights a critical distinction you just can't afford to ignore. See, in the U.S., providing legal advice and providing tax advice are strictly separate professions. What does that mean for you? It means you absolutely must hire two different firms. A law firm to handle your corporate structure, setting up your LLC or C Corp, and a separate accounting firm to manage all the tax implications of that choice. It's totally non-negotiable.
All right, now let's see how this builds into your bigger tax strategy. Because this isn't just about filing forms on time, it's about being smart. And that starts with a really powerful tool that every multinational company needs to get their head around: transfer pricing.
So if your parent company in Europe is selling goods or maybe providing services to your new U.S. subsidiary, you have to set a price for that transaction. But this isn't just some random accounting detail. It's a strategic lever you can pull to improve efficiency and, crucially, to manage your overall tax burden. And this slide really breaks down the goals. So imagine your parent company in, say, France, develops software for €100 and then provides it to your U.S. entity. The price you set for that internal transfer directly impacts where the profit gets recorded. The goal is to set a fair market price, sure, but strategically, this can also reduce the overall tax burden for the entire group. It's a bit of a delicate balance, but your expert advisors will help you get it just right. So you've got your federal tax strategy worked out. But what about the states? This question comes up all the time. The short answer is, it depends. You have to file in states where you have what's called nexus, which is just a fancy legal term for having a significant business contact. For instance, having a physical office, a warehouse, or even just one single remote employee in a state can create nexus, and this requires a really careful analysis by your tax advisor. All right, now let's talk about that other foundational pillar we mentioned: insurance. This is what protects you from all the liability that your contracts and your entity structure just can't cover. And there is a huge trap here that, unfortunately, a lot of European companies fall right into. I mean, it seems logical, right? You've got a group policy, just extend it. A lot of companies assume they can do this, and honestly, a lot of European insurers will happily sell you that coverage. But this is a super common mistake, and it can leave your U.S. business dangerously exposed to some massive uncovered risks. And here's why. European policies that insure U.S. entities are often just riddled with fine print. All these exclusions specifically targeting the U.S. market. They just don't account for the fact that everything here, legal fees, damages, repair costs, is vastly more expensive. The book material we looked at is blunt. It says 9 out of 10 times, if you only have a European policy, you're going to end up paying the bill yourself.
So, the absolute best case scenario, the holy grail of coverage, is to have both your European group policy and a dedicated U.S. policy. But let me be absolutely crystal clear about this. At the bare minimum, your U.S. entity needs its own separate U.S. insurance policy. No question.
Okay, so you need a U.S. policy, but what kind? Let's do a quick run-through of the staple insurance policies that will probably apply to your company. You can think of CGL as your classic all-around business protection. It covers you if, say, someone gets hurt at your office or if your work causes property damage for a client. It's also a huge trust builder. A lot of U.S. customers will not even sign a contract with you until they've seen your certificate of insurance proving you have this coverage. This one's pretty straightforward. If you have employees in the United States, you are almost certainly required by law to have workers' comp. It covers things like medical expenses and lost wages if an employee gets hurt on the job. It protects them and it protects you. Just know that the specific rules can vary state by state, so it's essential to get this right. Now, this is absolutely essential for any company that sells a physical product. If your product causes harm, this is the policy that shields you from potentially massive lawsuits. Sometimes this coverage is included in your CGL policy, but you have to verify that with your broker. Do not just assume it's there. But a truly robust plan doesn't really stop there. This chart shows a more complete approach. You'll also want to consider something called Directors and Officers Insurance, or D&O, which protects your leadership from personal loss. And then there's umbrella or excess coverage. That's what kicks in for those catastrophic once-in-a-blue-moon events that could blow way past your primary policy limits. So we've covered the what of taxes and insurance, but let's wrap this up with the who. Because when it really comes down to it, this is probably the single most important factor for your success in this whole area. Okay, here's the bottom line. You are doing your company a massive disservice if you hire an American CPA or an insurance broker who has to learn the European system on your dime. That is just a recipe for expensive, unintentional, and totally avoidable mistakes. So this checklist here, this is your hiring goal. You need to find advisors, your CPA, your lawyer, your insurance broker, who already know both sides of the pond. People who specialize in this exact transition, who get the nuances, and can help you navigate all the complexities without getting into trouble. Ultimately, that's the real question you need to be asking yourself. Assembling this expert team as early as you possibly can is the key. It's what allows you to develop a truly well-informed strategy, to really understand your costs, and to position your company for sustainable long-term growth here in the American market.